Welcome back to this series of instructional videos on the Intopia simulation. This particular video is about one of the cash flow tools that is made available to you under the resources section of the website. This one is the cash flow system. Okay, this is a little bit different from the projections workbook that you might have seen earlier. This is one that you can use during the game. When you're making decisions, you can put some of your data into this particular workbook and manage your cash flow as you're going. Now, I developed this little tool for use by teams that have difficulty for cash flows, but I strongly encourage you to develop your own. And there's a couple of reasons for this. This is developed using the way I see the world, which is not always the best way, but certainly the way, at least the way I picture cash moving in and out of the Intopia game. You may see it entirely differently. And in fact, oftentimes I see teams that build their own cash flow systems don't look anything like mine at all, but they seem to work just fine too. This particular version is in Excel, and it works well with pulling in data from your output. Now, I'm not sure how well this works on a Mac because macros are a little bit funny when you use a Macintosh, but you can certainly input the data yourself if you're using a Mac. But if you happen to be fortunate enough to be using a PC, you can actually just push this little button here called Retrieve Data, and it'll pull in your output, and that makes planning much easier. So what I'm going to do is just push this Retrieve Data button, and it's going to ask me for the name and location of the file to be collected. So what I'm looking for is my output from the previous period. So I'm just going to go down there and look for, here's Company 3, period 4, or Company 53, period 4. So I'm going to open that. And what that's going to do is pull in all of the necessary data. So you'll see what it did is it pulled in the inventory. So I got 10,000 units of standard Y available for sale in all three areas. It's going to bring in stuff like how much cash. I've got 132 million in my home office account, which is awesome. And I've got some negative balances in my area accounts, which is not very good. Okay, because if I have negative cash here, of course that means that I have a line of credit. You can see that the line of credit on the balance sheet is, in fact, in North America anyway, you can see it's 61 million, and our balance is 61,588. But you can also see that it pulls in the accounts receivable that's coming in and accounts payable that's expected to go out next period too. So what you can do with this particular workbook is go through and make forecasts and assumptions about what's going to happen in the next period. So we have some ending inventory here in North America. So we can assume that maybe what we're going to do is sell all of that in all three areas. So we're going to sell all three of in all three areas, we're going to sell all of our inventory of Y at unit prices of 500, 450, and 350. Okay, so those are all our standard units, and we're going to sell all those. And once we make that assumption, you'll see that that is reflected in cash sales for Y in the area. So you can see we're going to receive 3 million, 2.45 million, and 1.575 million. Now that's not the 5 million you're expecting to receive, because that's because the consumer payment terms are different per each area. So you only get, for instance, in North America, you only get 60% of that in cash, which is why you only saw 3 million of it coming into cash. The rest would be reflected in accounts receivable on your balance sheet. So you'll get that in the following period. Okay, so that's what we do with assumptions for that. And similarly, we make similar assumptions in terms of production. So maybe we're going to produce 10,000 units in each of the areas again. so that, and that's going to cost us $85, $85, and $75. So we'll make those projections in terms of what we're going to do in terms of production that period. So you can see that that's making adjustments as we go along. So we're already out of the red in China in terms of our cash balance. But we make assumptions based on what we're going to do in that particular period. So in this case, we're just producing some Y and selling some Y. Okay. Now we can also make projections in terms of what we're going to receive in terms of X and Y. So we know we're producing some Y. So let's say we're going to get some X. So we'll just say from Team 34, grade 2, price $35. We're getting 10,000 units of X in each area from our loyal supplier, Team 34. And we have to pay them 50% cash and 35% there and 15% there. So you can see that the total cash is reflected there in terms of what we're going to have to pay to Team 34. And that's also reflected in the cash paid for shipments of X here. Okay, so that updates our cash flow there, so we know we're going to have to spend that. Okay. And we're not shipping to anybody, but if we were doing B2B sales, we could enter those in here, and that would be, we would see the effect of total cash received and shipping costs if we were to sell any of our items B2B. Okay, so if we go back to cash flow areas now, we can enter in more assumptions about sales costs. So we know we're selling 10,000 units. We can say our sales commissions are $50,000. Our methods improvement on our plants is going to be $250,000 in each area. So we can enter in these assumptions in terms of what each of our expenses are. Now you'll have a better idea of what these are going to be by looking at previous outputs, but you can certainly see that how these are going to affect our cash flows. Okay, so I've put in fixed costs of plant, and I'll put in an amount for advertising here of $250,000, and those are all of our assumptions there in terms of expenses. So you can see that we have a bit of a problem in terms of cash flow in these areas. Okay, so we're down 60 million. So one of the things we're going to have to do is transfer out some money from home office to North America. So let's do a $65 million transfer. Okay, so that'll give us positive cash there. And you'll see that that's now updated in our balance in home office, transfers to Area 1. Okay, so this just gives us an idea planning-wise what we need to do. We need at least 89 million in Europe, and we need about 1 million in China. That'll get us all positive balances now, and we find we're 22 million short in home office in this particular period. So, I mean, there's a couple of options. We can play with some assumptions there, or we can just go running to the bank and say, give us 50 million, and then we'll be all set. Okay, but this tool will certainly, help us in the planning as we go. I find that teams that do a good job of managing their cash throughout the game are a lot more successful than those that fly by the seat of their pants. Okay, so feel free to use this tool or to develop your own, and good luck with it.